Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thanks for coming on today.
Good afternoon, David.
Well, the World Bank has slashed its forecast for growth this year in the global economy to 4.1%. For last year, it estimates now growth came into 5.5%. And next year, 2023, growth could go down to 3.2%. Tell us about this forecast from the World Bank.
World Bank President David Malpass has warned that the global economy faces a grim outlook as the aftershocks of the pandemic continue to weigh on growth, especially in poorer countries. World Bank's latest forecast predicts global growth will slow to 4.1% this year, from 5.5% in 2021. This slowing down global economy attributed the virus threat, government aid unwinding, and an initial rebound in demand fading. World Bank also said the greatest worry was widening global inequality, which means poorer countries were especially vulnerable to economic damage from efforts to fight inflation. World Bank expects by 2023, economic activity in all advanced countries such as U.S., Euro area, and Japan, and also South Korea is likely to have recovered from the hit it took during the pandemic. But income in developing and emerging countries is expected to remain 4% lower than it was before the COVID pandemic.
Well, speaking of inflation now, the chairman of the Federal Reserve, Jerome Powell, said on Tuesday in his Senate confirmation hearing that the Fed is going to deal with inflation by raising rates multiple times this year. That much, at least, is in line with what we've heard before. What did Powell say, and what do you make of it?
In his reconfirmation hearing on Tuesday, Federal Reserve Chairman Jerome Powell called high inflation a severe threat to a full economic recovery. And he said the central bank was preparing to raise interest rates because the economy no longer needed emergency support. He did not specify, by the way, the time for the next interest rate hike. But he reiterated that interest rates are likely to remain at historically low level. This is really a positive sign to U.S. stock market. He also added that he was optimistic that supply chain bottlenecks would ease this year to help bring down inflation. Mr. Powell's comments gave investors their clearest indication yet of how the Fed plans to start normalizing monetary policy in coming months. But his comment cooled concerns around whether the central bank would aggressively raise interest rates.
Right. Mr. Powell's remarks were fairly hawkish, you might say, but not overly so. And as you indicate, maybe the key word is clarity there. It seemed to give some reassurance to investors. And stocks on Wall Street were higher significantly. In fact, around the world, really. On Wall Street, the NASDAQ was up 1.4%. Shares of Amazon up more than 2%. Apple, Nvidia were another couple of companies up 1.5%. What's the story in the global equity markets?
U.S. stocks have been volatile as the prospects of imminent and faster than expected interest rate rises has shaken financial markets this month. But in yesterday's market, Dow Jones Industrial Average rose for the first time in days, led by rebounds in shares of technology companies, as Federal Reserve Chairman Jerome Powell reiterated the central bank's efforts to fix inflation. Yesterday, the Dow Jones Industrial Average advanced 0.5%, its first gain in 5 days. The tech-heavy NASDAQ Composite added 1.4%. All European markets and Asian markets advanced yesterday and today by shrugging off U.S. investors' concerns on Fed faster interest rate hike.
Right, and Korean shares today closing quite a bit higher. The Kospi now significantly closer to that 3,000-point threshold with a gain of more than 1.5%. Strength in chemicals, services. The Kosdaq also rising more than 2%. Tell us about the domestic market.
Korean stocks moved steeply higher Wednesday as the U.S. Fed chairman comments about inflation were largely within the market's expectation. The benchmark Kospi rose 1.5%, and Kosdaq also gained 2.2% today. Most large caps traded higher in Seoul's market today. For example, the number 2 chip maker SK hynix increased 0.4%, and pharmaceutical giant Samsung Bio climbed 2.9%. Electric car battery maker LG Chem moved up 5.3%, and internet portal operator Naver jumped 3.1%. The local currency was trading at 1,191 against US dollar, up 4.91 from the previous session's close.
Well, finally, Professor, the Korea Development Institute sees growing risks to the local economy. It said that recently, last month, and now again this month. In particular, it sees limited consumer spending and a general worsening of consumer sentiment. What's the outlook from the KDI?
In a monthly economic assessment report, KDI, the largest government think tank, warned that Korean economy faces heightened downside risks. These risks are related to tightened antivirus measures to curb the spread of COVID-19 cases and the slowdown of global economic recovery. Since December, the recovery of domestic private spending has been constrained by tighter social distancing measures to tackle the spike in COVID-19 infections. On the external side, global supply chain disruptions and monetary policy shifts by major economies and central banks are expected to work as downside risks for the Korean economy. Private spending contracted 0.2% in the third quarter, compared with a 3.6% on-quarter gain 3 months earlier. Uncertainty about monetary policy normalization by Federal Reserve is also serving as a major risk for the Korean economy.
All right, Professor, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.